Hello friends, welcome to A to Z Learning channel. Today's video is part of our Basics of Wealth Creation series. This is our fourth video and today's topic is Smart Way to Invest in Gold. I hope you find this topic quite timely as festival season. We are right in the middle of festival season and we must be taking decisions of buying gold just before the Diwali arrives. So without taking any further time, let's start our video. Historically, as you know, gold has had a special place for all of us. We love investing in gold. We've always found this as the safest form of investment. We've also kind of benefited from some amazing return, at least in the recent past, in terms of owning gold, investing in gold. Most of us in our society, we love investing in gold in the form of jewelry, which I would argue that is not the best form to be investing. Jewelry usually involves the cost of gold as well as the making charges, and making charges are basically dead cost when you go and sell it. So anything that you are bound to lose in any investment, I hate calling it as investment. Of course, jewelry is great from a consumption perspective. If you are buying gold to use it, to consume it, then absolutely jewelry is the only way for you to do it. But when we talk about investment, investment is different. For investment, you need to kind of look at what is the smartest way of investing so that you get all the benefits of all the return that is possible in the gold without having any dead element of cost built into it. These days, there are options available for us to invest in gold in a smarter way. Today, I'm going to be talking about two of those options. The first one is Gold Exchange Traded Fund, and the other one is the Sovereign Gold Bond, ETF and SGB. So let's look at the comparison between these two. We'll go through various anchor points and compare gold ETF, and in between I'll also refer it to the physical jewelry just to kind of make sure that you are all understanding it. First of all, if we look at the issued by, who issues the gold ETF and who issues the SGB, most mutual funds in India offer their gold ETF. So it's a vast majority of supply available for you to choose from. Whereas sovereign gold bond is issued only by Reserve Bank of India and Government of India. So there is a sovereign guarantee with the sovereign gold bond. So chances of you losing money is absolutely non-existent. Even mutual fund chances of you losing money is absolutely low, but theoretically speaking, it is not as good as a sovereign guarantee. Next point, let's look at the charges. Absolutely no making charges for gold ETF or SGB. There is a small, very tiny component of fund management charges under the gold ETF, but when you look at the sovereign gold bond, absolutely no charges. And I would say gold ETF though has got a tiny charge of management charges, fund management charges, but in the larger scheme of things, it can be ignored. It's going to be a negligible amount. The third point is the liquidity. Gold ETFs are highly liquid, can be redeemed on a daily basis. You just kind of buy today, sell tomorrow sort of situation. Whereas sovereign gold bond has got very low liquidity. You have the option of selling some of your gold bond in the secondary market, but they usually fetch a lower price and you can't sell big quantity there. So I would say for all practical purposes, it's a illiquid option of investing in gold. Price, gold ETF is pretty much going rate of the gold, actual gold price. So you can use that money to buy gold, physical gold, if you have any consumption need of buying physical gold. Sovereign gold bond is issued for 999 purity, which is 24 carat, and the price is as published by Indian Bullion and Jewelers Association, so it's a very transparent price. When it's issued, the price is taken the average of last 3 days, and if you're investing, if you're buying this gold online, then you get additional 50 rupees per gram discount on that price. So let's say last 3 days average is 5,000 rupees per per gram. And if you're buying online, then you'll have to pay only 4,950 and you'll get 50 rupees discount. No such option on the gold ETF. You just buy at the kind of actual rate and you sell at the actual rate. There's no discount available. The other component, interest rate, generally we don't expect any interest when we kind of buy gold in physical form. Same is true for gold ETF. There is absolutely no interest. But sovereign gold bond has got a very unique feature of paying you 2.5% interest annually. It's paid in 2 installments, so every 6 months you get some amount, but overall interest rate is 2.5% for the year. And that's a very attractive option. So you get the growth in the value of your gold, completely yours. In addition to that, you also get 50 rupee discount if you buy online. And the third advantage is that you also get interest of 2.5%, which is not available in any other form of investing in gold. Tenure, there's no fixed tenure for gold ETFs, but you need to hold sovereign gold bond for 8 years, though you have the option to redeem it after 5 years. But 8 years is when it becomes the most attractive from a taxation perspective. Minimum investment is 1 gram, so you can invest small quantity of money to purchase gold, whereas buying physical usually can become a big ticket investment, which may not be possible for all of us. But this option of going through gold ETF or sovereign gold bond gives you the flexibility to invest on a gram by gram basis. Therefore, you can invest small amounts of money and build a gold portfolio. The last but not least is the taxation point. ETF can be sold anytime, but if they are held for 3 years, then they are subject to long-term capital gain tax. Otherwise, it's like normal income tax. So it's similar to physical jewelry. Physical jewelry also, when you sell it, whatever is your gain, if you've held that jewelry for over 3 years, then it is subject to long-term capital gain, which is currently about 20%. If it is sold less than 3-year period, then you pay the normal income tax rate, which could be as high as 30%, 33%, depending on your income levels. So that's the kind of gold ETFs are similar to what you see in the physical jewelry from a taxation perspective. SGP has got a huge advantage. If you hold it till maturity, which is, as I said, 8 years, whatever is your gain, so if you're 5,000 rupees you have invested and 8 years later it becomes 10,000 rupees, so 5,000 rupees of gain is completely tax-free for you. Of course, if you don't hold it till maturity because you have the flexibility to sell it after 5 years, then you'll be subject to long-term capital gain, which is currently 20%. So that's the other thing to kind of keep in mind. So there are lots of kind of unique benefits of either going for gold ETF or SGP, and I call it a smarter options of investing in gold. To summarize, I would say that if liquidity, if you want like easy access, quick access to the money that you're investing in the gold, then go for gold ETF, because that's the kind of most efficient way of investing in gold and at the same time having a very quick access to your money as and when you need it. But if you are willing to invest in gold for a longer period, you think you can live without that money for 5 to 8 years, then SGP sovereign gold bond is the best option that is available. For a number of reasons: 50 rupee discount, 2.5% interest that is payable every year, and completely tax-free gains on the value of gold. So hopefully you found this information helpful. Hopefully this has given you the information to decide which way you are going to be buying gold during this festival season. Please do provide us our comments. And if you've not subscribed our channel as yet, please do subscribe our channel. And that way you will be immediately made aware, immediately notified about a new video, new content that we are posting from time to time. So thank you so much. Enjoy the festivity and have good luck with your gold investments.